extensively discussed the evolutionary timeline of the regulatory framework of cryptocurrency markets in the Indian financial ecosystem, let us analyze how the global central bank view the emergence of the cryptocurrency and digital assets. Do they consider the new asset class as a threat to their control on the sovereign currency? Are they on the verge of launching their own central bank digital currency? What are the risks that they perceive in allowing trading in cryptocurrencies? Yes, our next focus on discussion shall be the central bank digital currencies, or CBDCs for short. Digital currencies are creating quite a ripple in the world. What started as a resistance and reservation to alternate currencies promoted by private and unregulated entities, known more popularly as cryptocurrencies, the views of regulators are gradually veering towards how to make a beginning themselves. CBDCs are a digital form of the fiat currency issued by the central banks of the respective countries. It is not the same as the UPI payments or NEFT transfers, where we use the same ledger as traditional cash. This form of central bank money is created and transacted over a distributed ledger technology or blockchain, involving either permissioned or permissionless DLT. This form of money is different from the balances we usually find in traditional reserves or settlement accounts. So the CBDC is a digital payment instrument denominated in the national unit of account that is representing a direct liability to the central bank issuing the same. CBDC are digital instrument that does not require any physical branches to service the remote unbanked areas, so it can work wonders for financial inclusion. The CBDC system advantage is that it brings about efficiency in payment systems. Multiple payment points can be included in the system, and it could also simultaneously cater to large transaction amounts as well as manage the micropayments digitally without the involvement of low-value coins. Furthermore, a CBDC system provides the economy an alternative to cash and makes transactions seamless. It also helps the population from participating in the monopolistic and oligopolistic systems of the payment applications and sharing their crucial financial information with these big technology companies. A recent survey of the Bank for International Settlements shows 80% of the central banks in the world are exploring digital currencies, that is CBDCs. As of the end of January 2022, more than 20 countries have either launched a pilot project or have launched a fully fledged working CBDC. These countries are Bahamas, Canada, China, France, Singapore, Tunisia, Ghana, Nigeria, Malaysia, South Africa, UAE, Uruguay, Saudi Arabia, Israel, South Korea, Hong Kong, Thailand, Lithuania, Sweden, Japan, Russia, Australia, Brazil, Switzerland, and countries belonging to Eastern Caribbean Economic Currency Union of ECCU, comprising of Angola, Antigua and Barbuda, Dominica, Grenada, Montserrat, St. Kitts and Nevis, St. Lucia, St. Vincent, and Grenadines. Several countries including USA, UK, India, Euro area are in the research stage. India has already announced on the 1st of February 2022 that it would launch the digital rupee. Global policy makers are exploring how to involve the private sector, which will be entrusted with issuing coins under the regulation and supervision of central banks. That way, it is believed that the innovation of private sector and prudence of the central banks can create a right blend of environment that can fasten the progress of digital currencies. In addition, the thinking is that private sector could also be given the responsibilities of conducting due diligence of customers and monitoring money laundering and combating of financial terrorism, technology aspects, designing interfaces, and answering customers' questions that can enable central banks to devote more time to strengthen supervision. Such a collaboration can equip central banks with more scope and opportunity to design an oversight mechanism and streamline it. While global policy is in pursuit of exploring various options to enlarge its role for promotion of digital currencies, G7 has set up a working group, which came out with a report in October 2019. The working group analyzed stablecoins that is expected to decrease volatility and are pegged to stable assets. The International Monetary Fund or IMF and the World Bank too are actively promoting fintech agenda that will play a vital role in development of digital currencies, with both of them driving discussions on crucial aspects of institutional arrangements for fintech regulation and supervision and regulation of CBDCs in their working papers, adding to the awareness and knowledge on this subject. Having analyzed the current status of the adoption of the CBDCs by various central banks and measures advocated or recommended by international organizations such as the IMF and the World Bank and G7, let us delve deeper into the implications of the CBDCs on sovereign currency and the economies of the countries that are planning to launch these CBDCs. Central banks around the world are exploring the concept of central bank digital currencies that can be linked to their respective sovereign currencies. Since the issuance of CBDCs would be by central banks, they can exercise greater control over monetary policies. Digital currencies such as CBDCs provide real-time transaction data that central banks can analyze using data analytics based on big data applications, including money laundering. This enables central banks to obtain information for aligning monetary policy to monetary and fiscal policy goals. Central banks have come to realize that allowing only private cryptocurrencies without CBDCs may lead to increasing encroachment on their respective sovereign currencies, which may result in economic chaos. The only solution is to allow CBDCs to coexist, with the government of India now paving the way for digital currencies. Many of India's leading fintech firms currently engaged in financial services could expand their realm of research and business into new frontiers in digital currencies. Digitization in finance that has taken place in India in the recent years and continued thrust of the government will surely prove conducive to expand the scope for development of digital currencies. There is enough opportunity for India to showcase its work on digital currencies when it hosts the meeting of G20 in the year 2023. We leave you with a quick run-through of the benefits and risk of CBDCs. We first look at the benefits of CBDCs as perceived by central banks. Several of these central banks around the world are now realizing the numerous benefits for digital currencies. These include, but are not limited to, more efficient payment system that could bring down the cost of transaction, remove entry barriers for newer firms that could help product innovation and service enhancement, make monetary policy transmission more effective, bring more financial stability. And then there's the other side of the coin, the major risk due to CBDCs as perceived by central banks. Some of the major risks that central banks are seeing from the digital currencies are: threat of banks losing power of intermediation, as depositors could shift their deposits away from commercial banks to CBDC holdings. This in turn may also add pressure on banks to raise interest rates to incentivize depositors to keep their money with them. There is a constant danger from potential run-on crisis hit banks. There may be higher risk obligations for central banks to provide liquidity if funds migration from banks is taking place at a rapid pace. There could be a huge cost involved for central banks to develop digital currencies and to build capacity for an extensive ecosystem, including efficient platforms for interfacing with customers, building front-end wallets, picking and maintaining technology, and monitoring transactions.